Hello, everyone. Greg Diamond here, Diamond's Edge Live, and markets are moving. This is all about the tariff headlines that we saw yesterday and today. And if we think back about what we've been discussing over the last couple of weeks, we looked at the worst case scenario, okay, which was a low possibly into earnings. Earnings start next Friday, okay? The other scenario was that we had a low in March with a rally into mid-May, okay? Some stocks are actually still holding above those low March lows, but let's take the worst case scenario and look at how this might play out into earnings, which again starts next week, lasts into April, the end of April, okay? So some people are getting very, very nervous, very, very fearful. I'm very optimistic. I look at this as a very great opportunity to take advantage and be a contrarian trader. Now, that's obviously going to take some patience, okay? If not some short-term pain for long-term gain. That's how I'm looking at this, okay? Let's also think about, what's happening with these tariffs. The reciprocal tariffs, we're trading tit for tat about who's going to tax what on whatever goods, whatever country it might be. Okay, this is nearly the same playbook that we saw in late 2018. Okay, I don't know if you remember back in October to December of 2018, there was around a 2-month time frame where the tariff situation really spooked investors, spooked markets. We got a crash low into the around Christmas time in December. And then the Federal Reserve came out and they started to cut interest rates. Are we seeing a similar pattern? Is Trump basically trying to force the Federal Reserve into cutting interest rates while at the same time bringing investment and bringing money back to America with the hopes that the tariff situation will start to calm down? If everyone starts to bring down their tariffs to a more even playing field, okay, then everybody would win and that would see the tide turn. Another important point that I want to make is, and this is something that I said last week, is that if we see these lows into April, and that can continue, okay, I'm going to get into that in a second, but if we see these lows into April happen, okay, into earnings, okay, this could, and again, I want to stress this, based on some of my cycle work, and again, we looked at two different cycles, okay, one obviously didn't work, now we're looking at the other one, all right, this could be the low for the entire year, for all of 2025, all right, so keep that in mind, all right. The other, so let me jump into the screens here, okay, and I'll share my screen. And one thing I like to do when things get a little hairy is I like to go back to the big picture, okay? Is this something where we're going to see a protracted, bear market crash, kind of similar to 2022 or 2020 during COVID, or is this just it feels worse than it is based upon the long-term charts it's just a correction, all right? And what I want to show you here, this is the New York Stock Exchange Index, which basically covers all the listings of stocks in the U.S. All right. So here we are this week. Okay, and look. Okay, I'm highlighting this bar this week. It hasn't even broken below support here. Okay. Now it doesn't mean that it can't. Again, let's go back to what the scenarios were over the last couple of weeks. It was like, okay, we're going to get a low into March, and then a rally into mid-April or mid-May, and then that could be a problem. Or, as we're seeing now, let's say the likelihood, especially based on today, is that stocks drop into earnings. Okay, so starting next week, maybe into the end of April. Okay, that's the worst case. But you can see here, I have this wave 4 labeled. Okay, and into the end of April, right? This is just a corrective move from late last year. Okay. Does it last longer than you might think? Sure, but that's what corrections do, all right? But I'm not seeing this, yeah, again, today feels worse than it actually is if you just step back and look at the long-term chart, all right? Now let's look at Canada. This is the TSX in Canada, okay? And this is today's price action, right, on April 3rd. Now, does this look like a panic move for, our trading partners to the north that, obviously there's been back and forth between President Trump and what was Trudeau, now Carney. And, you can kind of see here, this has all the characteristics of a corrective move, off of this rally from last year, right? So this doesn't give me the, the sense, whether, at least from a technical perspective, even a fundamental perspective, it doesn't tell me like, hey, this is a crash setup. Some stocks, semiconductor stocks, are so quote unquote crashing today, okay? But we're not seeing that everywhere everywhere. It was not like COVID. It's not like 2022. It's certainly not like 2008, 2009, right? So this gives me more confidence that, again, if we see these lows into late April, which it's looking like that's going to be the case, we have support levels here based upon what I'm seeing, that this is going to be a corrective move that we can get really, really aggressive with. Again, if I'm right, this could be the low for the entire, for the rest of the year, okay? Let's also look across seas. Let's look at Europe, the Euro Stocks 50 index. This is kind of like the Dow Jones for Europe, okay? Now, as you can see, a sharp move yesterday off of the news, okay? And, still above its 200-day moving average, but Europe has been outperforming of late. And we know, I mentioned this last week, that Europe, a lot of hedge funds, a lot of CTAs are overweight Europe, underweight the US, okay? So are we going to see now that they have to sell their Europe, okay? They're short US, but eventually, if I'm right about what happens here into earnings, that they're going to have to cover those US short positions, and that can make some really big moves, especially heading into earnings. Let's look at China. China had obviously is impacted by tariffs, okay? And it barely moved. It barely moved last night, okay? Now, it's not saying after what happens today that we can't see a move down, okay? But, this has just gone sideways, okay? Maybe we trade back down to the 200-day moving average again into earnings. Okay, that works. I can deal with that. But it's not telling me, it's not a move where we saw in 2022 where everything just kind of crashed down, right? We're not seeing that. So, when I look globally, doesn't tell me to panic. When I look at the long-term chart that I showed you with the New York Stock Exchange index on the long term, again, doesn't tell me to panic. What it does tell me from a longer term perspective is that, this is a situation that you don't get very often, okay, where you see this type of divergence, where you see these, these scary moves, but it's actually happening within a normal, healthy correction of a much larger bull market. All right. Let me let's go to the chart that I've been highlighting a lot for literally for many, many, many months. Okay, and that is the semiconductor sector, SMH. Okay, now if you're just joining, we've been watching this chart for a long time. This topped in July of 2024 last year. Okay, and what I'm looking at is, you can see it here in blue, this long ABC. Now, what's interesting about today, and I'll get rid of these black lines here. What's interesting about today is that we just crossed below this August 5th, panic low last summer. So you can see that we're trading down in here, and you can also see I've labeled this a C and 5. Now, is this a situation where we get a low, okay, and then here, let me draw it out for you. Let's see. So let's say we get a low and then we get a bounce, okay, and then this is where we get into earnings, okay, and then we finally take off. Sure, I can see that, but the point here, and if you need to look at these black labels, 1, 2, 3, 4, 5. Again, when we get a 5-wave move down, that creates the end of the move, okay. So, and that would be the end of this much larger ABC. So you can see technically this is setting up beautifully for a reversal higher. When is the key point, and that, again, that, to me, based on time, is telling me into the end, or starting possibly next week. We'll look at financials. They start on Friday with JP Morgan, okay, and then we'll get into the tech stocks as well. But we're getting into a low here, and again, this would complete a monthly correction going back all the way to July, okay. So nearly a year correction that would take place, and that was telling me to get aggressively long, okay? Also look at the composite index and the RSI here below. That's obviously getting to oversold levels, all right? Also interesting, and I'm gonna switch to the SOX index, which is the cash index. It's very, very similar to what we look at with SMH, but this is a weekly chart, okay? And I was working on this morning ahead of the show, and what I wanna show you on this weekly chart, first of all, let's look below here, and you can see it's getting into this very oversold condition, not since 2020, the low in 2020 during the COVID crash in March, okay? We haven't seen this oversold on a weekly time frame, okay? And you can see here back in the composite index that has the same thing, all right? This low in 2020 in the composite index was much deeper, but it's not often that we get, you can see down here in my cursor, it's not often we get these type of oversold conditions on a long-term weekly chart, okay? So again, and you can kind of see here, well, you can see, I have this big ABC corrective move with this wave 4 that, again, to me tells me that corrective move from July into April is coming to an end, okay? So just to recap some of these the semiconductor stuff, yes, obviously we're seeing this sharper move than in some stocks than others, but what it's telling me is to get ready. All right, now let's switch over to some of the stronger stocks. Semiconductors were the worst. Let's look at financials. So this is XLF. Again, JP Morgan reports next Friday, and you can kind of see here, I think I highlighted this from our last show or a couple weeks ago, and I had here in red, this low in March would mark a low, and then we would rally into mid-May, then we would have a worse situation, okay? But now we can take that out for the most part, although you can see here financials did not make a new low today below that early March low. Is that something where we actually do have another bounce? Sure, I'll get into that in a minute. But you can see this green line, okay? You can see how I kind of labeled this, right? And this, I'll extend this out into April, right? Do we have a situation where, okay, this low, we get another bounce, okay? Then we drop down into the 200-day moving average. We scare a lot of investors below the support line, but it's happening into oversold levels, it's happening into earnings, okay? And that creates that reversal, okay? That's what I'm looking at with XLF, right? We can also look at a stock like Microsoft, okay? And this has, and you can see I have this C wave down here, right? And this actually, it's trying to come back today. It's not as bad as the NASDAQ or some of the other stocks that we're seeing, right? Doesn't mean that we can't trade lower, but Microsoft is very, very similar to SMH in this corrective move since last summer. And you can kind of see here, I have this C wave, right? So A, B, and then this C wave, right? Okay, and here's another scenario to think about. Let's say today marks a short-term low. We get, a strong relief rally into the middle of April, and then we get that final low into late April, and that sets the stage for a massive rally. I can totally see that happening. Okay, let's look at Apple. Apple's another one that had a big move. Okay, but this still has the corrective characteristics that I like to see in stocks, overlapping price patterns, overlapping swings. Okay, yeah, we have this huge gap down. You can see divergence here developing on the RSI and the composite index. Okay, so this isn't something where I would start going crazy short and Xing out of everything. Okay, but it's also a situation where I want to see heading into earnings. All right, once we get into the earnings season, that's where I'll look to start buying dips. It's as simple as that. Okay, now that's going to require patience. Okay, that's going to require hanging tough, as I like to tell 10 stock trader subscribers. Okay, through this volatility, but coming out of the other side, again, if we go back to this long-term chart, this is just a correction. Okay, now the risk that we were taking was, do we see this in March with a rally into mid-May again, or happening, it extends lower into earnings? That looks like the most probable scenario now based upon this tariff situation. But, this is something where I'm going to look to get very, very aggressive. So I'm looking at the short-term pain as an opportunity because the long-term gain is really going to be something to watch. Okay. Now let's look at the S&P 500, and I want to show you, you can see here I have this ending diagonal comment on here. And what is the ending diagonal? Let me get rid of these real quick. I was looking for symmetrical moves, but within an ending diagonal is a Elliott wave principle where you see these overlapping waves down or up into an ending move. The ending diagonal, in this case down, ends the move, and then you have a reversal. And you have this thing called the rule of three. And this is where Elliott wave principle gets a little tricky in terms of the normal, hey, wave 5, wave 3 corrections. It still has the same characteristics of 3 waves and 5 waves, but usually what you'll see, and I've labeled them here, are 3 waves stacked or stacked on top of each other, or they overlap within each other. And you can see that here with the black outline that I have. Okay, so 1, 2, 3, 1, 2, 3, and then you can see here, maybe we get a low into into Friday, okay, or possibly Monday. Everyone starts freaking out. They start selling everything. Okay, we get a bounce. Okay, and then another drop, and then a bounce, and then we get into this again into earnings. All right, but if I see this overlapping nature develop, and I'm going to be tracking this, I'm going to be sharing this with you guys each week. Okay, especially my 10 stock trader subscribers each day for that matter. Okay, and then we get this rally out of it, that confirms the low for me. That confirms the low for the entire year for me. All right, we can also see here at the bottom, look at the RSI and look at the composite index. Right, we had this huge move down today. Okay, and we're starting to see this positive divergence develop within the technical indicators. Now, I'm not telling you that this is going to be the exact low, but what I'm telling you is that we're getting close. Okay, so these are the scenarios that I'm watching. Okay, and we can even look at Nvidia. Right, had a big move down in percentage terms, but that's when you have to step back and say, okay, just like I did with the New York Stock Exchange index at the start. Is this something where it's complete panic, or is just a part of a much larger correction that we've been tracking? To me, it's the latter, right? So again, you can, and NVIDIA doesn't report until the end of May, the 23rd, I believe, if my memory serves me correctly. So, we could see this situation where one of the, the biggest stocks on the planet gets down into earnings into April, okay? And this is something that we could buy ahead of earnings, along with the rest of the market, okay? I also I outlined Taiwan Semiconductors of late, okay? This has a very similar setup, you can see here, to SMH, right? I was looking at possibly that this would be the low, right, in late March as a 5-wave, but you can see how this is just a beautiful textbook wave 5. Now, obviously, this wave 5 looks to be extending, but look at the composite index. Look at the RSI below. This looks to be, it is forming positive divergence, okay, within this 5-wave move down, within this longer term correction within the semiconductor sector. We've looked at the weekly chart of SMH, how that is, getting into support levels. Here's something, let me go back to the semiconductor sector. I think this is important as well. All right. So in the first episode of Diamond's Edge Live, and you can go back and watch this if you want, but I explained Fibonacci retracement levels. And what you want to see here when you go back is, okay, you can see this 38.2% Fibonacci retracement level. It's breaking down below that, okay? But you have the 200-week moving average here in red that is telling me, all right, we're probably close to support. So you can take these measurements, or what you can do is you can just keep going back. And so let's go back. I mentioned 2018, okay, that low. That was the other tariff low. Look at, this is hard to see, but so this low from 2018 all the way up to last summer, all right, I'm gonna follow this line all the way over, and then you can see it's right here. You see that? So let's say semiconductors drop, I don't know, another percent maybe, right? That gets into a long-term 38.2% Fibonacci retracement level, right around the 200-week moving average, right into these oversold levels on a weekly time frame, which is very important, okay, in terms of oversold levels. That this would be just a wonderful setup where we have, again, what I would believe to be the low for the entire year. All right, so those are the charts that I'm focused on the most this week. I'm happy to take any questions that you may have. Let's see. Could these insane tariffs cause the next global financial crisis? It's my contention. That's a great question. My contention was always that I thought the U.S. government should have started cutting the tax rate. Okay, so it's true that the United States workers have and the United States citizens have been unfairly treated by other countries with the tariffs that they've had in place for a long time. What have they've been treated worse by? Their own government. Okay, we shouldn't be paying what we're paying into this system when we've seen how corrupt it has become, the waste. It's just ridiculous. So to me, I would have liked to see Congress pass a tax cut on the rate and then have these tariff situations, right? So that's something where, maybe that comes down the pike later, okay? To me, that would be a huge boon, okay? Especially if everybody starts to take their tariff situation down and then everyone doesn't pay as many taxes, more money in your pocket. That would be a huge boon for the stock market, for the economy, globally as well, all right? Could it cause the next financial crisis? Yeah, if we keep escalating tit for tat, okay, and then no one backs down, that would stifle economic growth. That would stifle, global partnership in terms of buying and selling. But the United States is the biggest consumer on the planet, and everybody wants to be our customer. So eventually, this is going to have to come to some type of conclusion where hopefully everyone kind of has cooler heads and brings all these reciprocal tariffs down. Will this all lead to the biggest economic boom in history? Well, I just kind of mentioned that. I think that if we, again, and this is more fundamental, more macro related, okay, but it also goes back to kind of what I mentioned at the start. Is this a redux of 2018? Do we see, is this, the President Trump says, you know what, we're going to get the Federal Reserve to cut interest rates. Inflation is going to be lower. Oil's down 7-8%, whatever it might be. Okay, egg prices have come down. If we have investment come back to the U.S. and they bring the tariffs back, that could be a massive boon for the U.S. economy. Actually, absolutely. Any plans to roll down IWM and TQQ positions? So I didn't want to add any options before this tariff announcement. Now that I see what's happening, okay, and I've outlined what we've looked at, those two positions are something I'm going to be looking at in terms of rolling for sure. So be on the lookout for that. Are there scenarios in which tariffs can actually benefit specific sectors or stocks, and how can traders spot these opportunities? Yes, the thing with what we just saw is that is pretty much blanket tariffs across the board with all of these countries. Okay, but let's look at a stock like Caterpillar. Okay, and how is this going to be affected? You can see it had a drop here today. Steel, aluminum, I believe we're not affected, okay? So we could look at something like that, but I think with such a blanket of tariffs on every country, I think spotting those might be difficult because, again, it's just so blanketed. But maybe we get a situation where over the next couple of weeks, and this might lead to that low, is, he starts, whether it's President Trump or other countries, saying, hey, for automakers or something, we're not going to have as strict of a tariff. So that is something to look at. But I don't trade automakers, but that's something to look at for sure. Are we in the 90-year Contrarian cycle? The 90-year Contrarian cycle is a 54 to 56-year cycle. There is a Gann 90-year cycle. I believe that quote unquote ended in 2019, 2020. I'm much more focused on other cycles, but the Contrarian cycle, that's a generational cycle, so that would take me a little bit longer to answer in terms of where the starting point would be. I think we're in other cycles right now. What about gold or gold stocks? What do you think is a better setup now, gold or silver? So I don't know if you guys saw, but silver had a massive crash today, or not crash, but a big move down. I think it's down. What is it as of right now? It's down, almost 6%. Okay, and this is something that I highlighted over the last couple of weeks. I wasn't thrilled with how silver wasn't catching up with gold. Okay, gold even had a big move down today. All right, we can look at how this it topped, it dropped. It's still in a beautiful uptrend. You want to look at Barrick. We can look at that real quick. Sorry. It's not popping up here. That's all right. But my basic contention here, actually, let's just look at GDX. Is that I'm not seeing the follow through that I wanted to see in silver to be able to trade it. I'm not saying that you can't trade it. Okay, obviously gold has had a nice move. Okay, but when I don't see that correlation between gold and silver and the mining stocks, again, I highlighted this before, but I'll say it again. With gold, at new all-time highs, what would GDX be? I would think that GDX would be screaming higher, making new all-time highs above the 2011 high, but it's not. It's not even close. Is April 22nd still the possible inflection date? Yeah. So we'll look at how earnings shake out. Again, they start next week. So what would be a great setup to me would be is if we see banks start to make a low. Again, similar to this that I've outlined here. Okay. So let's say we'll see how the short-term setup. Okay, we may still have more short-term pain. But if we get this a low and then a rally, okay, let's say banks rally first, okay, and then there's that drop into late April, whether it's April 22nd, April 28th, whatever it might be, that's where the tech stocks probably create a low, or we see, XLF make a higher low, while the Nasdaq or something makes a new low. Oh man, that's the setup to buy. If the market gets too crazy, well, Elliott wave theory still apply. Elliott wave theory applies to everything all the time. That's what's great about it. Now, the key is to manage your risk and try to understand what wave we are in during that time. But to me, and this is something that I highlighted to 10 Stock Premier subscribers and Alliance members. I give out a quarterly Q&A video, and the great thing I love about Elliott Wave is actually one of the criticisms of it. And people say, well, it's too subjective and you never know after the fact. Yes, well, it's not that you never know, but if you are wrong and you figure out what the market is telling you within the rules, that's when you can take advantage of what happens next, the probabilities of what happens next. So yes, especially if the market gets crazy, that's where Elliott Wave is, in my opinion, it's most useful. Is this a good time to diversify into international stocks versus domestic? That's actually a good question. I can't tell you exactly what to do and give you individual investment advice. However, if we go back to what Canada is doing, okay, it's not nearly as panicky as the U.S. is. So is this something where, some exposure to Canada, maybe even China, is something to look at? Sure, as a percentage, it's not a bad idea. What are some of the sources that you use to find good market info news? So I don't watch television. I watch television, but I don't watch the financial news. I don't have any of that stuff up on my television or anything like that. I don't like to look at it. To me, it's all noise. They're looking for stuff to talk about. Okay. I have Bloomberg, which is my source, but that with the charts that you see now, those are just the headlines that I see. But I've learned to just look at the headlines and then infer based upon what my technical analysis is telling me, and I say, okay, is this worthy of something that needs to be addressed? Does that change my outlook in any way? But that's after 20 plus years of kind of honing in my strategy. But I like Bloomberg. I mean, there's certain things in terms of source and news, but I always take all of it with a grain of salt because, again, a lot of them, they're just looking for headlines. Oil went down because of X. Well, not really. They're just looking for something to talk about. But I use Bloomberg mainly. How does the Tesla chart look? Yeah, Tesla, I think, is very, very interesting. This might be something where we start trading this soon. So here's something else to think about. Look, it bottomed on March 11th. All right. It's not making these new lows with the stock market today. This is positive divergence, all right? I'm not going to get into the Elon Musk thing, but, if we see, it's very similar to what we'll see in other stocks. If we get this low into earnings, again, whether that's mid-April, late April, I don't care. If we see a new low into April in Tesla, I'm buying it. Is this a good time to concentrate on real world assets versus financials? Yeah, I think real estate is obviously cyclical. It depends on where you live, but having that, especially now with interest rates coming down, you're probably going to see some activity pick up in the interest rate market. Okay, holding a little gold is obviously going to be pretty good. I'm not an art person, but art has its value as well. So I'm not as bearish as some people are out there in terms of concentrating on real world assets versus the stock market. Okay, but it won't hurt you to diversify in that. When do you start worrying? Well, that's a good question. I think I would start worrying is because what I mentioned earlier, the fact that if these tariff wars continue to get to the point where nobody blinks, okay, and nobody brings it back down, and if we get through April and it's really, really bad, and or the Ukraine-Russia war kind of picks up, that would be a global problem, okay. But I think this is where understanding fear and sentiment, along with what's happening in the charts and time cycles, is really something to pay attention to. Okay, so I think that's it for questions. I really appreciate you tuning in. The again, we have some really good volatility setups. I'm very excited. Again, might see some more short term pain, but I think it's going to be long term gain. All right. Thank you very much, and please tune in next week.